Welcome back to the Dividend Diplomats YouTube channel. You got your boys here, Lanny and Bert, the Dividend Diplomats. It's Saturday morning. You know what that means. It's time for another stock video. Buckle up, everybody. We're going to talk to you about this chip stock that has been absolutely beaten down. It was decimated over this last week. In fact, the day we're recording this on Thursday, it was down over 9%. Buckle up, get ready. We can't wait to see why this is shooting right up my dividend stock watch list.
All right, guys, smash that subscribe button. Give us a nice thumbs up. As Bert said, is this an AI slash chip stock to buy
Mhm.
right now? Because this whole sector in the tech industry, hey, guidance expectations were here, and they're
Mhm.
coming in a little bit right here. And going forward, they might be a little bit right here.
Yeah, and after all the hype everyone had talked about, there's this AI bubble that's booming. There are these stocks that just are on fire. NVIDIA, everyone thought it was going to go to $8,000 per share after the stock split. I'm just kidding. Nobody knew where it was, but you couldn't have a bad day for NVIDIA. ARM, you couldn't have a bad day. There were so many great tech stocks that were
Intel, you could
just
have
on
had a
fire.
ton of bad days.
Yeah, Intel was the exception. So the sector that was the hottest to start 2024 is maybe showing some signs of weakness here at the end of July, beginning of August, as we get through earnings season. Why is that, Lanny? As you said, guidance is coming down a little bit. We've had a bunch of major chip holders say that their guidance is coming in a little bit softer than where those forward expectations are. What happened after that, Chico?
Oh man, guys. Well, what happens when you have lower expectations? Stock prices drop. The whole industry right now is dropping because they're failing to meet those expectations that the market has set for them, but maybe that they previously had hinted at.
Mhm.
Um, so a lot of weakness right now. ARM holdings dropped 16% after weaker guidance. Intel, if you guys haven't caught Friday, we're filming this, by the way, on August 1st, Thursday. So a lot's going to be hitting the fan at the end of the week here. But Intel had bad earnings. They're trying to cost cut even more.
Mhm.
Another round of layoffs, and that sent the stock price tumbling, 10 to 20% in the after hours market here. Um, but it just wasn't them, Humbert.
No, it wasn't. And that's really what happens. And to your point, Landy, when expectations come down on companies that are soaring because of future promises, you know there's going to be a correction that slides right in there. But this stock,
Oh, for
Landy,
sure, for
this
sure.
stock might be threading a perfect needle. And why is it popping up on my watch list? They crushed earnings that were released this week. They weren't
Oh,
necessarily part of the softer guidance. So that's why this one's coming up my watch list. It's a stock I bought a lot of in 2023 and early 2024. Everybody, today we're talking Qualcomm, ticker symbol QCOM. And you know what?
oh,
That's exactly what it was. They had strong revenue in their earnings release on Wednesday. They had strong earnings. They even had strong guidance. Yes, they actually said their guidance was going to go up here. So that's what was interesting. They said earnings per share were 233, revenues rose 11.3% for the year over year. It was 9.39 billion. And yes, those expectations, earnings expectations shot up from where they were. They said earnings are going to be between 245 and 265 per share for the next quarter, and analysts were expecting 247, and revenue is going to be between 9.5 billion and 10.3 billion when they were expecting 9.7 billion. So the numbers in the earnings release and everything the day of earnings on Wednesday was fantastic. And Lanny, how much did their stock drop on Thursday?
stock dropped over 9%, guys, for Qualcomm. Again, this big monster, 202, billion market cap here, dropped down to $164 a share. Again, they're up 130% in the last 5 years, still up 24% in the last year. Again, this stock is really here now to say, hey, is this brief, 15 plus dollar share drop an opportunity right now for us investors who are looking at a company that grows dividends every year, a
Yep.
company that has an above average dividend yield, a company that simply continues to play it safer in this space and continue to perform and set expectations, right? I don't know, bro. I know you own shares in Qualcomm as well.
Yeah, that's absolutely right. And that's the beauty of it. And that's why this one is particularly jumping out at me. And to say safe, to back this up, their revenue, income, and cash flow from operations have all grown significantly. Over the last 5 years, revenue has gone up 47%, and income's gone up 67%. And that cash flow from operations, Lanny, has gone up nearly 135%. So, yes, my wife and I have built that position because this company has performed so well. We own 39 shares and change total. So we have about $6,500 here at Qualcomm. Our cost basis is 4,700 or about 100 and no, just 4,700. I was reading the wrong number on my spreadsheet. So overall, a nice solid game there. We're pretty happy.
Yeah, you're sitting nice, but now you're thinking, hey, is it time to
Mhm.
possibly add to the position here? And that's what we're going to find out. We're going to find that out, guys, by running this stock through the trusted Dividend Diplomat stock screener. We know the metrics. We know that revenue is growing, operating cash flow is growing. We're doing well growing revenue actually here in 2024. But we're going to take a look at the price to earnings ratio less than the S&P 500. That dividend payout ratio, hopefully it's less than 60%. History of growing dividends, you know that they do that, but let's see how long and at what rate. Then we'll look at the dividend yield and compare that to the 5-year yield dividend average. And we like to do that just so we can really see, hey, is this yield at or below or above what they usually yield at? If it's above, if the yield is above where they usually yield at, price to earnings probably is a little bit lower. It could be a better opportunity to add some more income for less.
Yeah, so let's jump right in here. That PE ratio, they closed at $164 even. I love when stocks finish even, right on the money. Forward earnings are $10.03. That's a PE ratio of 1635. Compare that to their 5-year average PE ratio of 19.49. It is lower than their historical valuation.
Yeah, 16 PE in this day and age, in this 25, 28 times earnings, plus, I'm not even going to bring up NVIDIA's, PE ratio right now. It's pretty solid. Dividend payout ratio, $3.40 is their dividend, obviously annually, but you break that out up 4 quarters. You're sitting at a dividend payout ratio of only 34%. So plenty of room from a cash flow and earnings perspective to continue to pay that dividend, grow that dividend. Just what us dividend investors who are looking for that passive income want to hear.
That's
Yeah,
right. Let's see how it goes. Their 5-year dividend growth rate is 5.56%. They've increased it for 20 years, so they're almost a dividend aristocrat. That's been the one knock on Qualcomm I've heard from people. You wish they had higher dividend growth. And I must say, I do agree, but right now in this environment, I will not complain about 5.5%.
they're begging for it, Bert. Looking at the dividend yield, they're now at 2.07%. So the yield has popped back up over 2% because of the stock price drop here. Now, the 5-year dividend yield average is 2.28%. So the current yield is actually below that 5-year dividend yield average.
That's interesting. So let's go through it here. Qualcomm again, 16 PE ratio, 34% payout ratio, 5.56% 5-year growth rate, increased it for 20 years with a 2% dividend yield. Yeah, I mean, it's not the cheapest, but it's cheap compared to historical standards. It's got great, solid metrics. It's a conservative play in this chip AI sector. Lanny, it is shooting really high up my watch list, and I will continue to add maybe a share or two, especially if it dips below that 160 mark, which is not that far off.
So you're looking at 160 or you're looking at 150. What's your price
I mean,
point?
I think I'll just add a share if it goes below 160, get myself over that 40 share mark. And then if it drops, every $5 it drops, I might just add in one more share there. If it hits the 155, 150, it's a great company. I already have a position, so I am not adding a new ticker to my portfolio, which is kind of key right now.
Yeah, hitting 160 is only a 2.5% stock price drop. So I can easily see that, guys. What about you in the community? Are you buying Qualcomm stock on this shock stock drop, on this quick price drop? Let us know in the comments. Do you currently buy and hold any other chip stocks? We're still holding the bag with Intel as well.
Yeah, if you haven't already, subscribe to the channel, give this video a thumbs up, and remember, you're either with us or you're against us, Jack.
That was Bert, the Hurt, and Lanny from the DD Over and out.